Hi everyone. In the past few months, I've had several conversations with concerned investors, people who are anxious about where the markets are heading. And they might say, you know, David, the markets are hitting new highs all the time. Don't you think it's got to go down? Or they might say, it's been a few years since the last market crash. Aren't we due for another one? And typically, these fears originate with a headline that they read on the internet, or maybe even a story that they saw in the news. And so if you're going to be a long-term successful investor, you need to be able to see the financial media for what they are and to be able to tune out the noise. The financial media is filled with stories of doom and gloom every single day. So just a few days ago, I was on Yahoo Finance and I came across this article, and it says, billionaire activist Carl Icahn says time to be cautious on U.S. stocks. So as an investor, you see that, and what they want you to do is to get scared. And on the very same day, I went to CNBC.com, and they had a story that said, market will crash, just don't know the catalyst, according to Mark Faber. Again, doom and gloom. Then you have companies who profit from doom and gloom and fear. Earlier this year, I saw these radio ads from Porter Stansberry, and he's supposed to be this market researcher, and he was announcing the impending collapse of the US dollar. And his company ran radio ads, internet banner ads, and posted videos to YouTube, and he predicted that on July 1st, 2014, that the US dollar will officially collapse. And of course, if you subscribe to his website and pay him money, he'll tell you exactly what you need to do to protect yourself. Well, July 1st came and went, and the US dollar did not collapse. And this guy has a history of doing things like this. In fact, in 2011, he produced a big video, a big marketing campaign saying that in 2011, America as we knew it was going to end. Well, 2011 came and went, and America is still here. And so as investors, there's this fairy tale that's out there that some people hold on to. And the fairy tale is this, that there are professionals that are so skilled and knowledgeable that they can accurately and consistently predict what the market will do next. And it's very alluring. After all, as an investor, it's not fun to see a market crash. It's not fun to see the value of your accounts drop 10, 20, 30%. And so it would be great if there were someone out there that were so smart, so sophisticated that we could trust them and they could protect us from all of that. Well, the reality is that markets are unpredictable and no one really knows what they're going to do in the short term. I love what Warren Buffett says. He says, the only value of stock forecasters is to make fortune tellers look good. And then there's another great quote from Peter Lynch that says, far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. And so, as an investor, what do you need to do to be successful long term? Let me give you three things. The first is don't believe the prognosticators. They're merely speculating. They don't really know. Okay? Every day, if you look for it, you're going to find people who are predicting what the markets are going to do next. But the reality is no one really knows. And every once in a while, you come across a guy that says, well, we got the last market crash correct. We predicted it. Well, I suppose if you predict enough things for long enough, you're going to be right on a few of those. The reality is no one really knows. The second is to tune out the noise of the media. Financial media exists to make money, and the way that they make money is through advertisement, and they do that by getting as much viewership as possible. And so you can imagine that they're going to sensationalize things. They're going to play on the emotions of fear and especially greed. Okay? And so with the stories that you're going to read, they're really designed to cause you to panic and do things that you shouldn't do. So the second thing is you need to be able to tune out the media. And third is to have a long-term perspective. If you're an investor, that means you should be an investor for the next 10, 20, 30, 40, 50 years. And there's always going to be short-term volatility in the market. We can't get away from that. And yet nothing can stop the upward permanent march of the markets. And so in the end, in the big scheme of things, short-term volatility is just noise. And so take a long-term approach. When volatility happens, relax. In the long term, it's really not going to matter. So there you have it, 3 things that you can do to be a successful long-term investor. Thanks for watching and have a great day.